Well, in focus, we have the emerging markets.
Yeah, well, we know we've talked a lot about emerging markets, and they often get treated as one asset class, but of course there's many and various different markets within them. And so I thought it might be quite interesting just to have a look at this table, courtesy of Bank of America, Merrill Lynch, and MSCI Capital International, just to look at some of the the characteristics that we've seen in the markets at the moment. So first of all, we have seen some very sharp falls month to date and year to date numbers here in the first two columns, and so we can flag here, Brazil month to date down 4.4%, South Africa down 6%, even India, which is probably one of the the pick of the bunch, down 2.2%. And if we look out to the year to date column, South Africa down 17.3% thus far, and Brazil down 35.7% thus far. But just to exemplify the fact that these things don't all move in line, it's interesting to see that Russia is actually still up 7% year to date.
But Brazil enjoying its newly found junk status.
Yes, downgraded only recently, wasn't it? So, and then if we move across to the next group of numbers, which are related to valuation, it's interesting to sort of compare and contrast what we're seeing here. So the average 12-month forward PE for the emerging market sector is 10.4%. But if we look, for instance, here at Russia, trading on a PE of 4.4%, and then that contrasted with the valuation for South Africa, 14.1%. It would seem to me that there's something to give there. So maybe South Africa's too high, Russia potentially too cheap.
But China actually quite attractive.
8.8 times, yes, not too dear at all. And then the next column, price to book value, and I think again quite interesting to see that Korea is just on 0.9 times book value, and Russia a very lowly 0.6%. And again, South Africa there trading at 2.4 times book value, and India 3.1. So a lot of a differential there. I'll leave it to other people to make up their minds about what's right and what's wrong there. And then finally, what are we looking for in terms of 2016 and 2017 in terms of growth? This year, Russia and Brazil earnings there are expected to be completely in the toilet, down 37%. As far as Russia's concerned, and 26.2 as far as Brazil. But if we look forward to 2016 and 2017, they start to bounce back. You can see that Brazilian earnings are expected to jump back by 31.6%, and in 2017 by 21. So in Russia, 11.4 plays 18. So whilst we're heading towards the bottom, if not bottoming out at the moment, some people are looking forward 2 years with perhaps a contrarian view, and will doubtless be thinking about trying to find some value in amongst those
well, the other thing is it's difficult to work out what sort of magic will appear in 2016, which we don't know about now.
That's true, and it's also true, of course, just because they're cheap at the moment doesn't mean they can't be cheaper. We said that about Russia ourselves back in October last year. So it's probably right to try and keep a watching brief, let the market tell you when it's formed a bottom, rather than going, try and call it yourself. Nonetheless, it is interesting to see that that the great and the good do believe that some of those emerging markets at least will bounce back quite strongly in the next 24 months.
Right. On that happy note, Darren Sinden, market commentator at Admiral Markets, thanks for being with us today. That's it for the Wall Street Crossover Show, sponsored by Admiral Markets. We'll be back on Monday at 1 p.m.